Bitcoin just quietly outperformed both gold and stocks after the last three major global shocks. And nobody's talking about it. I'm talking about a pattern so consistent that institutional investors are starting to notice. But here's what's wild. Most retail traders are still sleeping on this insight. The data shows Bitcoin recovered faster and climbed higher than traditional safe havens in every single major crisis since 2020. And I'm about to show you exactly why that's happening. Look, we live in an uncertain world. Every few years, something shocks the markets. A pandemic, a bank collapse, geopolitical tension. When these happen, people panic and look for safety. Traditionally, that meant gold. Gold's been the ultimate insurance policy for centuries. But something shifted. Bitcoin emerged in 2009 as digital money. For a long time, nobody took it seriously as a hedge. Then 2020 hit. Then 2023 hit. Then 2024 happened, and the pattern became undeniable. While gold climbed steadily and stocks plummeted, Bitcoin did something different. It crashed hard initially, sure, but the recovery velocity was insane, and the upside capture was even more insane. Let me break down what the data actually shows. During the COVID crash in March 2020, Bitcoin fell about 50%. Brutal, right? But within 8 months, it had tripled. Gold rose maybe 25% that same period. Stocks took longer to recover. Then came the banking crisis in March 2023. SVB collapsed. Credit Suisse imploded. The fear was real. Bitcoin immediately jumped 20% in days. Gold moved maybe 3%. Stocks went sideways for weeks. Why does this happen? Here's the secret nobody wants to admit. Bitcoin isn't correlated to traditional markets the same way. When institutional money gets scared, they don't just flee to gold anymore. Gold is slow. It's physical. It takes time to buy and sell. Bitcoin? You can move billions in minutes. It's always on. It's global. No closing time. There's something else happening too. Bitcoin has a built-in narrative during crises. It's scarce, hard money, limited supply. The opposite of what governments do when panicking. When central banks print money and debase currency, people start asking questions. Bitcoin starts looking like insurance against that exact thing. That creates buying pressure that gold doesn't get. The third factor is psychological. Gold is boring. It's your grandfather's safe haven. Bitcoin feels like the future. When people are scared, they sometimes don't want yesterday's solution. They want tomorrow's solution. They want to own something that's solving the problem they're actually worried about. Now, what does this mean for you? This isn't me saying Bitcoin is guaranteed to outperform. That would be crazy. But it does suggest that Bitcoin behaves differently during stress. It has different properties. Some portfolio managers are starting to treat it like an asymmetric hedge. You allocate a small percentage. When shocks happen, that small percentage might surprise you. The window is closing on this being a secret, though. More institutions are studying this pattern. More people are understanding it, which means the dynamics might shift. But the underlying truth remains. Bitcoin moves to a different rhythm when the world gets uncertain. This pattern keeps evolving. New shocks will test it. New data will emerge. If you want to stay ahead of these shifts before they become obvious, subscribe to Crypto Genius. We break down the data before the crowd catches on. New insights every single day.